Just so we're crystal clear, this isn't financial investment or tax advice, all right? I'm just breaking down the charts using Fibonacci for discussion only. Whatever you decide to do with your money, that's 100% on you.
As of November 3rd, 2025, at just before 8 p.m. UTC, Dogecoin's trading at 16.86 cents. Looking at the coin's entire all-time structure from its first recorded price at 8/100ths of a cent back in May 2015 to that historic peak at 73 cents in May 2021. Here's how every level fits together across more than a decade of price action. This range from 0.0000869 to 73.16 cents defines the complete foundation of Dogecoin's price map. Every rally, every crash, every meme-driven surge happened within this framework. It started at the all-time low in May 2015 at less than 1/10,000th of a dollar, then exploded to 73 cents by May 2021. That's over 8,000 times growth in 6 years, one of the most extreme moves in crypto history, driven largely by social media momentum and retail speculation. The Fibonacci retracement levels map how this massive rally corrected. These aren't arbitrary lines, they represent mathematical zones, where buying pressure met selling pressure after the parabolic move. Understanding where price sits within this range tells you whether the bulls who drove that rally still have structural control, or whether the correction has deeper to go. Right now, at 16.86 cents, Dogecoin sits below the 0.618 retracement level at 28 cents. That's a critical technical signal. It means the correction from the all-time high has retraced more than 60% of the entire move. The global bullish structure that took price from fractions of a cent to 73 cents is now under pressure. The market is testing whether long-term holders still believe in the return to those highs. Let's break down each major Fibonacci retracement level and understand what happened at each zone. At 55.89 cents, the 0.236 level price met its first major resistance after peaking at 73 cents. This is where the earliest buyers from the parabolic rally began taking profits. The market tested this level during the initial correction phase. This represents only a 24% retracement from the all-time high, a shallow pullback that suggested the euphoria was still strong. But price couldn't hold above it. The 0.382 zone sits at 45.21 cents. This became the first critical test of whether the rally could resume. At this level, the correction deepened to 38% from the peak. Medium-term holders who bought during the social media frenzy started questioning whether Dogecoin would ever return to 70 cents. The market consolidated here briefly before continuing lower, showing that demand wasn't strong enough to defend this zone. At the 0.5 level 36.58 cents, we hit the mathematical midpoint. Exactly halfway between 8/100ths of a cent and 73 cents. This is equilibrium. When price broke below this level, it signaled that more than half of the entire parabolic rally had been erased. That's a major psychological break. It tells you that sellers, many of them taking losses, overwhelmed the buyers trying to catch the dip. The 0.618 retracement sits at 27.95 cents. This is the golden ratio level, and it's the line Dogecoin is currently battling. Price dropped below this zone, which means the correction has now retraced 62% of the entire all-time move. Once a market falls below the 0.618 level, the macro bullish structure comes under serious pressure. This is where long-term conviction gets tested. Many traders use this level as the final line of defense for a bull market. Below it, the trend is technically compromised. Down at 15.66 cents, the 0.786 level we're in deep value territory. This represents a 79% retracement from the all-time high. At this level, price would be giving back nearly 80% of the entire parabolic move. This is where only the most convicted holders remain. But it's also where smart money with long-time horizons starts accumulating for the next potential cycle if they believe one is coming. Right now, price is hovering just above this critical support zone. The nearest support sits at 15.66 cents, that 0.786 level. This is the deep structural floor. If price breaks below this level with volume and conviction, there's not much mathematical support until we approach the previous cycle lows. That would signal the entire parabolic rally from 2021 is being fully unwound. For context, dropping to this level means Dogecoin would have given back 79% of its gains from the meme-driven peak. The key resistance currently sits at 27.95 cents, the 0.618 level that price recently lost. This is now overhead resistance. For the bullish structure to have any chance of recovery, price needs to reclaim this level and hold it as support. Every attempt to break back above 28 cents has failed so far, showing that sellers are actively defending this zone. They are either cutting losses from higher prices or taking profits from lower entries. What's critical here? Until Dogecoin reclaims and holds above 28 cents, the macro trend remains under pressure. A clean reclaim means closing above it on higher timeframes, successfully retesting it as support, and then continuing higher. Just briefly touching it isn't enough. We've seen multiple failed attempts already. The market needs to prove that buyers are willing to step in at these levels with conviction. If 28 cents breaks and holds, the next target becomes the midpoint at 36 cents, then 45 cents. But that's a big if. The current structure suggests more work needs to be done before buyers can regain control. The battle right now is between 15.66 support and 28 resistance, a range that defines whether this is a deep correction or something more serious. Fibonacci extensions project where price could go if bulls ever regain full control and push Dogecoin to new all-time highs beyond 73 cents. The 1.272 extension sits at 93.05 cents. This is the first major target if Dogecoin were to break its previous all-time high. Reaching this level would represent about 27% above the previous peak. For context, getting here would require a complete reversal of the current correction, reclaiming every major Fibonacci level we just discussed, breaking through 73 cents, and then extending beyond. That needs massive volume, renewed social media momentum, and broader market support. The 1.414 extension at $1.03 represents a major psychological level. Breaking above $1 would be historic for Dogecoin. It's never traded above $1. This level sits about 41% above the previous all-time high. Markets that reach this extension after a deep correction typically need fundamental catalysts, not just technical momentum. For a meme coin like Dogecoin, this might require renewed celebrity endorsement, mainstream adoption narratives, or a broader crypto bull market lifting all assets. The 1.618 extension $1.18 since this is the full parabolic target. If Dogecoin were to extend with the same mathematical proportion as its previous cycle, this is the projected level. That's 62% above the previous high. But let's be clear, reaching this requires more than just price action. It requires sustained buying pressure, massive volume increases, new retail participation, and probably another wave of social media viral momentum, similar to what drove the 2021 rally. These extensions aren't predictions, they are mathematical possibilities. Whether Dogecoin ever reaches them depends on factors we can't predict: market sentiment, competition from other meme coins, regulatory environment, and whether the community can generate another viral moment. But the structure shows us where the targets would sit if momentum returns. Right now, with price at 16.86 cents, these targets seem distant. The market needs to prove it can even reclaim 30 cents before we can seriously discuss 90 cents or higher. Bringing everything together, as of November 3rd at just before 8 p.m. UTC, Dogecoin trades at 16.86 cents below the critical 0.618 Fibonacci level at 27.95 cents. This positioning tells us the global bullish trend that took Dogecoin from fractions of a cent to 73 cents is now structurally compromised. The correction has retraced more than 60% of the entire parabolic move. The key level to watch is 15.66 cents, the 0.786 support. As long as this floor holds, there's a mathematical case that the structure remains intact, even if damaged. A break below 15.66 would signal the correction is extending toward a full retracement of the 2021 rally. That would be a major technical breakdown. On the upside, 28 cents is the level that needs to be reclaimed for any bullish case to rebuild. A clean break and hold above 28 would target 36 cents, then 45, and eventually a retest of the all-time high zone. But right now, every attempt has failed. The market is showing us that sellers remain in control. Fibonacci symmetry has guided Dogecoin's behavior throughout its history. The current structure says the correction isn't over until either support at 15.66 breaks completely, or resistance at 28 cents gets convincingly reclaimed. No hype, no speculation, just mathematical levels that have held for over a decade. That's the framework. That's where the battle sits. Follow for data-driven crypto analysis structure, levels, and logic. Well, that's it.